Hey everyone, welcome back to Corporate Decoder. Today we're diving into People's Bancorp's latest annual report, and let me tell you, it's a bit like reading a novel where the plot twist is stable growth. Or is it? Stick around to find out. For those unfamiliar, People's Bancorp is a financial holding company, meaning they own and control a bunch of smaller financial businesses. They're primarily operating through People's Bank, their main bank in Ohio, but they've got other subsidiaries handling things like insurance and equipment leasing. Okay, let's get into the meat of this report. The year ended December 31st, 2024 is the period we will analyze, and it seems like People's had a pretty good year, showing a net income of $117.2 million. Of course, we'll dig deeper to see what really drove that number and some key ratios. People's offers a wide range of services, from your basic checking and savings accounts to more complex things like trust management, insurance, and even equipment leasing. They're like a financial one-stop shop for both individuals and businesses, and you'll see how they want to integrate non-traditional products and services with traditional banking products. A big move for People's was their acquisition of Limestone Bancorp back in 2023. This all-stock merger really expanded their footprint into Kentucky, and that added a significant amount to their loan and deposit portfolios and to their goodwill, which is an intangible asset that comes from acquisitions, representing the value that isn't directly tied to physical or financial assets. It's worth noting that People's has been buying back its own shares. They repurchased shares worth $3 million during 2024. This can be a signal that the company believes its stock is undervalued or it just wants to return value to shareholders. Their lending portfolio is heavily weighted toward commercial loans. About 60% of their total loans are for commercial purposes. This can carry a higher risk of loss compared to other types of loans. They have risk management strategies, reviewing commercial loan relationships that are above a certain amount to evaluate possible credit deterioration to try to get out in front of any possible issues. In addition to commercial loans, People's offers insurance premium finance loans. That means they loan money to businesses through insurance agencies so that those businesses can purchase insurance. It's secured by the unearned premiums of the insurance policies themselves. This kind of lending tends to be relatively low risk. About 20% of their total assets are in investment securities. These are primarily obligations from the U.S. government or government-sponsored entities and state and local governments. They're using this portfolio to manage excess funds, provide liquidity, and generate income within their risk profile. As a bank, they're subject to a ton of regulations. They've got the Federal Reserve, the FDIC, the CFPB, a whole alphabet soup of regulatory agencies. The goal of all these rules is to protect consumers, depositors, and the financial system as a whole. Bank regulators want to make sure financial institutions have enough capital to cushion against potential losses. They have different categories like well-capitalized and undercapitalized and different rules and requirements for each. People's needs to maintain certain levels of capital, and if they don't, regulators can step in and take action. People's ability to pay dividends to its shareholders may also be restricted. The Federal Reserve Board has a policy about not paying cash dividends that exceed the company's net income. Cybersecurity is, of course, a major concern. They're relying on electronic communications and information systems, which opens them up to risks. They have cyber insurance to cover losses, but there are no assurances. Now, let's talk about the risks that People's is facing that might impact their performance. First off is the big picture. Changes in economic and political conditions can really affect their business, with things like interest rates, inflation, and government policies playing a huge role. If things get tough, people might not be able to repay their loans. Interest rate risk is key. People's earnings depend on the difference between what they earn on loans and investments and what they pay on deposits and borrowings. If those rates don't move in their favor, their profitability can suffer. Geopolitical instability is also something on their radar. Conflicts and market disruptions like the war in Ukraine or the conflicts in the Middle East can have a ripple effect on the global economy and People's business. Operational risk is always a concern for any large organization, and they're also subject to cybersecurity threats. That includes potential breakdowns in their systems, breaches of security, fraud, and just general errors that can occur. People's also has a loan agreement with U.S. Bank, and if they don't meet certain conditions, it could limit their financial flexibility and even lead to a default. They need to stay on top of anti-money laundering laws and regulations. Falling short in this area can bring serious financial and legal consequences. They need to attract and retain top talent. Given where many of their offices are, it is important that they can compete with larger cities and provide a strong wage and benefit base to attract and retain the talent that they need. The Chief Risk Officer keeps an eye on things, supported by various committees, ensuring that they have eyes and ears on the cybersecurity of the bank. The CISO updates the risk commit quarterly on the status of their cybersecurity. To get a sense of how these risks are showing up, let's look at some key financials. Net income for the year ended December 31, 2024, was $117.2 million, compared to $113.4 million for 2023. But remember, these headline numbers don't always tell the full story. Net interest income increased to $348.7 million for 2024, compared to $339.4 million for 2023. This reflects the full-year impact of Limestone merger, with offsetting higher borrowing costs with higher earning asset yields. The provision for credit losses, or the amount of money they're setting aside to cover potential bad loans, increased, while the provision of credit losses for 2023 increased as well. The provision for credit losses during 2024 was primarily a result of higher net charge-offs, Roman II, an increase in reserves for individually analyzed loans and leases, Roman III economic forecast deterioration, and Roman IV loan growth. Total non-interest income, which includes things like fees from electronic banking, trust and investment services, and insurance commissions, increased primarily due to $2.6 million increase in lease income, primarily attributable to operating lease income, Roman II, a $2.4 million increase in trust and investment income. Eeples continues to exceed the capital required by the Federal Reserve Board to be deemed well capitalized, including a Tier 1 capital ratio of 12.39% at December 31, 2024, versus 12.37% at December 31, 2023, so that's really a pretty strong thing for them. Reading between the lines in this cybersecurity disclosure, despite the safeguards, the company recognizes cybersecurity is an ever-evolving concern for their business.